Hi, welcome to my YouTube channels. My name is Azad Gailani. Today's trading course is about how to read a chart with a Gailani Q10 strategy. This course is named as A-6 and Q-10, which is gonna to be in both group of my trading courses video for A series and Q series. Q series is for advanced trading, and A series for those new beginners, those who are new in the trading. So let's start with this Gailani Q10 strategy. Okay, first of all, I wanted to say that this the Gailani Q10 strategy is both for professional and for new traders, beginners, for the beginners. So this is once we this course is completed, you should be able to master any charts, and the most important part of this is that you will have a lot of confidence of your analysis and your understanding and the result or what you have how you of your readings from the chart. That is very important, because having confidence in your readings will give you the power to make the correct decisions for your trading. That is the most important things that a trader must have. So these techniques are very special techniques that you can find nowhere on internet or YouTube or wherever, because basically this has been developed by my years experience in trading. Okay, these 10 these 10 techniques, we have categorized that in two different categories. One is called market structure, and the other one is price action. So the 4 point here, the four first techniques, they are dealing only with market structures, while the other 6 techniques, they are dealing with price action. So let's go to how they do that. They are first of all, one requirement for these that you have to respect it, you have to apply it, and otherwise, if you disobey these rules, that will not help you at all. So that is the understanding that the dependency between these 10 points or these 10 techniques. So you have to go on that order that I am showing here. So so the first one that you start is number 1, and then you go number 2, number 3, up to number 10, and then number 2 is dependent on the number 1, and the number 3 will be dependent on number 2 and number 3, and then number 4 will be dependent on the number 3 and 2 and 1. So that is basically how is the dependencies between these techniques. So you should not jump from one technique to another technique or go back and forth with those. You have to follow obey the rules and go one by one, because when you go one by one, the one that is right now you are working on, that is actually providing the answer to the next one, and the next one is providing the answer to the other one. So that is why they are so dependent on each other, they are so connected with each other. Okay, the first rule is called the weak high and low. This is very good, because this is the goat of two aspects. One is this shows the psychology of the market, because this is the exact point. The exact point is not something that you are guessing. It's not something that you are creating. That is the exact point that the supercomputer, the professionals, traders, the normal the beginners, whoever in in the market, they are using this one, and even supercomputers using this one, and this is the exact number. And that is basically what it is here, is the within the period of 50, you bring the period of the 52 weeks in your chart, and then you look at that the highest price within that period and the lowest price in that period. So that is exact. So everybody is looking for that, but most of the trader does not care about that, because they are not used to that. They are used to, you know, just playing with price actions and on all these lower time frames, but they ignore this big picture. This big picture is going to give you confidence, is going to provide you so much power, that is giving you so much power that you get closer to the real world of trading. And those who are really driving this market, those who are really driving the price of the asset that you are looking at that. So this is very, very important. And then once you have that point in that weekly week high and then you will find a central line or a middle line, and that middle line is basically the average of the highest and the lowest those price that you find it, and you add those price together and then divide that by 2, then the result of that will be the central line. And then what you do a straight line from the highest price to the price axis, and then you do another straight line from what is called from the lowest price within the period of 52 weeks to the price price axis. And then the same thing with the central line. When you find the number there, what the price of the central line, then you just pull a straight line all the way to 52 weeks, and then you keep those lines in all time frames, everywhere that you go in those time frames, until the condition is changed, until this highest or lowest point they go outside the boundary of these 52 weeks. And then you have to redo these things and look at that. Okay, where is now within that 52 weeks, where is the new week high and low for me? Then you define that, and then maybe it goes for 1 month, and then you have to define it again, because no, time is advancing all the time. The time is not stopping, and so is this point is gonna move backward until it goes outside the 52 weeks period, and then it changes everything. Then we have to look at the new week high and week low and find them, and then new central line. Okay, so once we have done that in the time frame, first, as I said, we go to the time frame weekly, and then we go to the time frame daily. I will tell you now how we will do that. Okay, so we are still in the time frame weekly until we do all these 4 points. Okay, so next one is in the weekly time frame is to find trends. Look, trend is very, very simple things. So for many people, the trend might say, okay, I don't know how to touch these highs and lows and how to draw these lines, and I don't know, I'm not confident like this. You don't have to be confident here. You need to know that there is just 3 things for a trend. There is just 3 options. There is three type, not more than 3 type. You look at that for these 3 type, or if you think of these 3 types, and then you look at your chart and you say, okay, where is there any uptrend? If there is any downtrend, if there is any range. And once you see this one, you just do the lines, you push, you draw these lines for the trends that you are seeing. Okay, if you there is always this trend, either is uptrend or downtrend, or is a range. And the good things is that is the bigger picture, because you are looking at the weekly one, and that is going to give you the most picture that is noise free. There is no noise, no price noise there, and that is based on a lot of data, and so that is very, very important. Okay, So next technique is that channels. Okay, so again, channels exactly like channels exactly like trends. There are we have three types of channels, not more than. Okay, we have horizontals, we have diagonals, we have triangles, and then you look at that. Okay, do you see that any horizontals, diagonals, or triangles? We have the triangles. We have ascending triangles, angles, descending triangles, indecision triangles, or uptrend triangles, downtrend triangles. Okay, these are you can see these in other videos of mine. So if you wanted to get more familiar with triangles structure. Okay, the things is that once you come here, these number 2 and number B has already provided that to you, because once you have the trend line, whether it's up or down, and the range, and then you basically use that one, and then the output of from this research and the output from this research will give you the answer to this one. Very simple, just straightforward, and I will show that on you on the chart how simple it is. And the next point is support and resistance. That is exactly once you have identified your channels, you have identified the trends, and then you have identified your weak low and high and low, and then the central line. The central line, you find all these, and then it's very easy. Those are exactly the support and resistance. They become sometimes support, they become sometimes resistance, depends on whether the current price is above or below these lines. Okay, look at that. The how dependence, these are just one of these that you do, that the other one depends on that. So once you have done number 1, 2, 3, number 4, it comes automatically, it comes for free, it just comes for free. But I have put that in the 10 techniques so that you don't forget it, you remember that. It is the magic with this Q10 is that you can read, you can remember things, you can focus the main things and remember why you are looking at these charts and what you are expecting to see in the chart. That is very, very important. That's why we have to put these roles here of support and resistance. Okay, once we have done this one, and then we go to the next time frame. Once we go to the next time frame, we'll repeat this one for the time frame, daily time frame, which is the daily time frame, and then we repeat this one in the daily time frame. Then we go for the other 6 techniques, and once the other 6 techniques is done, then you can take that identified, exact, and well confident market structure to all time frames that you want to, whether it's 1 minute, 10 minutes, 15 minutes, 1 hour, 10 hours, 4 hours, doesn't matter. And then you will see that the chart is talking to you itself. The chart is explaining to you very, very exact what is happening, and that will create confidence with your decision, and that confidence will give you power for making the correct decision. Okay, so what is the next one? The next one you look at, that is the last price, or the current the price, the last price. What is the price right now? Why I am telling you this? Because you are looking for predicting the futures. So you have to look at the current price, not to go look at in the middle of price, or look at all other candles that's irrelevant, is far away. You need to focus at the current, around the current price. Why? Because is that you can see that and relate to the others, and then predict the future of the future movement of the price. And then once you are there, this time you will look at that. Okay, how much the price has been changed today? Whether there is a big candle so far, is a small candle, is just small changes or big changes in these things is very, very important. Again, I am pushing you to look at that, because that is where you have to look at that in order to make the decision, to do perfect reading and master your reading. Why? Because if you relate all these things together, suddenly you will see that the chart is talking to you itself. So next technique is the previous day close. That is very, very important. Then you have today close. You look at the previous close. Okay, how it was closed. Was it a doji candle? Was it a hammer candle? Was it engulfing? Was it a big candle body, or how it was? How it was closed? Was a bearish, very bullish, and today is bearish or bullish? These will make you to to be organized, to have some kind of organization with your reading, so that you relate to things to each other that makes sense, and that makes sense will help you to understand and do correct reading. Okay, if we look at the previous close, then we have to look at the open today. So the open price, today's open price, and the yesterday close price, they are very, very important, because you see that you are closing in a price today, and then next day when you are opening, you are 10% up opening, and then but let's say 2% up you are opening, and then from that you go up or you go down. That means basically the opening of today and the closing with yesterday, it's almost 2% that difference, and that give you the good picture to understand what is happening and how confident is or how whether this is a mixed signals or ambiguous signals, or how it is, and then that will help you to really to focus, to make good decision. And then once we have all these 4 points that they really push you to look at the around the current price and to understand how things are related, and what changes has happened, how you understand these changes, and that these 4 points will push you to do that. Once you did that, you relate that to the market structure on these 4 points here, and then you suddenly will see, oh, that's exactly what happened. But what is important, then you have to look at the volume. The volume is very, very important, because the volume is giving you the confirmation whether that signal that you are seeing, that reading that you have, that reading that you have from your chart, whether that reading is a confident one, whether that is a real one or a fake one. If you see there is a very these changes has happened on a very low volume, that means basically is a fake signal. You cannot trust it, you cannot do anything there, because you basically you have not enough data, you have not enough volume to be sure that okay, this is what this is correct, this is not a fake movement. So normally I look at the moving EMA, exponential moving average, in my volume, so that if is below that means basically below that 20 moving average, that means that volume was low. If it's touching that or above that means basically touching that means is normal trading volume for that asset. If it's above that means basically it something is very serious there, and that give you the confirmation, okay, the movement that you see, the momentum that you see that in the price, that is very, very strong momentum, a very strong movement, and that will give you more confidence that okay, that is a confirmation. Actually, that is a confirmation that what you see, that is a confirmation of that those changes are real change. Okay, once you have these 9 points, what it means, then you will go candle. Okay, what is happening here is very, very interesting. Now we have done the weekly time frame, and then we moved into the daily time frame. In the daily time frame, we repeat this market structure just to see that if there is something new that and we added. Then we went to the price action, and now we have the candles. So what candles, that means basically again price actions, but then it depends on your it depends on your personal strategy, whether you are a swing trader, whether you are a day trader or a scalping trader, whatever it is, depends on your decision, whether you are working in 15 minutes time frame, 1 hour time frame, whatever. Then you move to that time frame, and then you use your candle knowledge, your price action. If you don't know too much about these candles strategy, you can see one of my videos on the video that is coming about these candles structure, candle trading, which basically is about the engulfing, bearish, engulfing, bullish, engulfing, doji candles, or harami, or hammers, or three white soldiers, whatever. So these will come and do that. So what is important is that we have to, that information that we have got here, that information, we pass that information in all time frame that we are looking. And what it does that all time frame is giving you exactly the same correct information. So you another advantages with Q10, Gailani's Q10 strategy is that it's giving you so much power that no matter in what time frame you look, you still have the big picture. You still have the big picture, and that big picture will help you to identify the key area, the key levels on the chart, which are very, very, very good, and the probability that you make the good decision and the winning trader is very, very high. Why? Because you are using market structure from a bigger pictures, and a market structure that is being used, which is common between all the traders, not a market structure that is only for your taste, or that is only that you have developed for your strategy. That will not be the correct one. Why? Because we are dealing with a real world, which is the big guys that is in the market, and these big guys are using these techniques, which I just talked about that. Okay, guys, let's go to the chart and see how we can implement this on the chart, and see what will happen there. Okay, what we have here in my chart, I have the US dollar basket, which some of you is the US dollar index. Okay, for this example. Okay, now what we will do, we will go point by point with our roles. Okay. Or techniques. We have, as I said, we have to respect these techniques and rules, and we have to obey. There is no way to disobey. If you disobey these rules, then you will not get the result that you were expecting. Okay, the first one is telling us, okay, the first one, which is important, they tell us, okay, first one, we have to go to the weekly time frame. At the moment I have the hourly time frame, then I change that to the weekly time frame. So from the weekly time frame, what will happen if I just remove these lines here? So what will happen here is that actually I have the line here because I just did the Kurdish video of this just before this English one. So then what we will do, we will look at that. Okay, what is we get the chart for the weekly, what is called the 52 weeks high and low. And if you look at that, at the moment the current price is on the 18 October 2021, which is week 42. You see that, and that is but if you look at here, that is October 2020. So October 2020 week 43, and that is October 2001 for week 42. That's exactly the point that we wanna. So what we do here, we look at, okay, what is the minimum, the maximum price. The maximum price actually is this one. So we will just draw a line here, a straight line here from that maximum point. Here we go all the way here. Okay, so to the price axis. Okay, axis. Then we have, I already have a line here, the blue one, that is where this is the lowest price. So if I just mark it here for you, so this was the highest price within the 52 weeks, and that is the lowest price within 52 weeks. So very nice, exact number. That is exact number that they are using, and we are using that. So then what we will do, we will take that price, which is 9,458 plus 8,900, then we get the middle. Let's say we the middle is about here, so we take the central line as was central lines here. That is basically, that is exactly what. Okay, this is the central line, the middle line between these two. Look at that. Already you see how the price nicely, the chart nicely tells you. And the good things here is that it gives you the confidence. Why? Because they are using the same technique. The supercomputer are using the same, on the trading floor, they are using the same techniques. Traders, they are using the same things. That is a common technique. That is a common things that every time you see a news on the TV and all this, they are talking about the 52 weeks high and low for S&P and all this. Why? Because this is how it is, the real things. Okay, but look at that, how nicely it tells you what's happening, how nicely is giving you the picture on the weekly time. Okay, so next point, it tells also, okay, then next technique is trend. It tells you, okay, find me the trend. Okay, we have the first price here, and we look at that, what trend we had. Okay, it's very easy. We see that if we touch all these candles here and these candles here, we see that, okay, look at that, this is very good, the trend upward. And then if we touch this low with that low, and then we have another trend. Okay, if I touch that low with that low, and then we have another trend here. Okay, so then that builds a channel. Very easy. So we said that for trend you have either uptrend or downtrend or range. And here we see very easy that for the past few weeks, half year, we have seen that from July, from May, we see that there is an uptrend of that. And this big picture is very easy that you can identify the trend, because that has so much data, is different from a time frame, lower time frame like a minutes time frame or a hours time frame. That's why it's so simple to find these structure. And then what is the next technique says? The next technique says, okay, identify the channels. Oh, that's simple. You see how they are dependent on each other. I said that the earlier techniques, they provide answer to the previous, the next one. So the next one, it says canal. So it's very easy to see that we have a horizontal channel here. We have another horizontal channels here that is building this top with this middle one, and then we have another one that is built by these trend lines here. That is another ascending channel or uptrend channel that is built here. So that is very good. So now next technique is number 4. Number 4, it says support and resistance. Yeah, fine. You see all the other three, very easy answer that one. So of course we have support and, so we'll look at that. If there is any other support and resistance, we can have it. Yes, we can have, for example, this high to this high and to this low. So if we look at here, we can draw this line as well here. You see. So that goes, you see that here this is behind the other year, but we see this touch here with this touch here, so we can find another small channel here as well. So what is that support? So because the price is here above these lines, and all these lines are a support, and then this line is support, and these two lines are resistance. So this one is a resistance, that one is a resistance. So look at that. How beautiful it is. How beautiful it is. It's already give you all information. Okay, you're already in the time frame that you got all the big picture information. Okay, no, we did the first things for the market structure for the weekly time frame, and now we go to the daily time frame. Okay, we go for the daily time frame. I change here for the daily. Okay, now we are there. Look at that, how beautiful it is. Just look at that, how exactly they give you the structure, automatically give you a structure in the lower time frame. And that is like this, even if you go the time frame 10 minutes, 20 minutes, whatever. So it shows you, look at that, how nice it gives you. Again, we go repeat the same things, market structure, the 4th point for the time, in the daily time frame. Just not to get the confirmation, no, just to make sure that if there is anything that is any additional channels or trends or support and resistance we can identify in the daily time frame or not. If you look at that, we basically we are not identifying anything more than what has already been there. So basically, if you look at for the trend, so for the weekly high, if you go back to number one for week high low, okay, we don't care about that because we already have done that in the time frame, weekly time frame. And then we look at for the, if there is any trend, no, there is no more trend. We see that very clear here. And then channels, there is exactly the same channels that we had that on the weekly time frame. And if there is a support and resistance, no, I don't see anything here beside what been had provided. Okay, now we did the market structure. Now we did the what is called the main part, the market structure. That is the beauty with this technique, is look at that, how the chart itself is talking to you, how the chart itself is giving you so much information, so much information that you can use it to make your decision. And the most important part here is that those are correct one. Those are nothing that you have guessed. That those are the common one that is being used in the real world and in the market. Those that you are, those big players in the market, they are using exactly the same thing, the same method. The supercomputer is using the same thing. So these levels that you have identified here, this market structure that you have identified, is a very good one, very common one, and the one that is really being used in the real world. So that is what I call it, give you confidence. Q10 Gailani Q10 give you really confident that okay, that you have made good decisions. Okay, now we go to the other 6 point. Okay, now you might ask yourself this question: what the hell? How can I go this headache and to say this one by one but to go that? No, this is all about the practice. Once you have practiced this, for a time, 2, 3, 4 days on different charts, you will see this become very automatic, very simple like practice for you that comes automatically. Your brain is getting trained such a way that it becomes a very common practice for you to look at the charts like this, and you see that these charts are very important informations. So now what we go for the other 6 point that is left. Okay, so what we have, that the next point, the next technique, it says last price. What is the last price? The last price, that means basically the current price, that is this candle that we see here, this small candle that we see here. Okay, we look at that. Okay, we find that why I want you to have this, in the 10 technique. Why? Because I wanted to make sure that you are not focusing on the wrong things here. What is important here is that you are trying to predict the future, so based on the history of the data. So once you do that, the more you are on the right side of this the better. Why? Because you are predicting the futures of the current one. So that is the reason I want you to mention that as a technique, that you always focusing on the current one. And then what is important here, you will see, okay, what has changed, that today's price change. Next one, number 6, is today price change. Today price change, okay, we look at that, how much is changed. Actually, it is not being changed that too much. It's just become a kind of a doji candle. A doji candle is being built here. Is not too much change. And then the other things is that we look at, okay, the previous day. Previous day. If I just move this line here, just to make sure that is the previous, we see that there is a bullish candle, that there is a bullish candle, but that is very, very small candle. Okay, so the previous close was bullish. Then because we look at the previous bullish, we have to look at the open here, whether that has opened above here and then fold, or that has above opened here and then went up. That is very, very important information when it is open. But we see that for this candle, it has opened exactly a little lower than the yesterday opened. That means basically then it has fallen. Okay, but for us to know what we did, we look at the current price, and then we'll look at the previous close, and then we will look at 2 days open, and then we look at the 2 days change, and all this information we use, and then we need to confirm. We need to confirm that this information that is really is not a fake signal, that is not a noise, that is a real signal, that is a signal that you can count on it, you can be confident on that. How you can do that? Yes, by rule number 9. Rule number 9 tells you to look at the volume, the volume here. You look at that. If you look at this candle that was yesterday, you see that, okay, yeah, you had the control. The buyers had the control. But if you look at the buyer has control, but the volume was much almost 10% less than its moving 20 moving average. That means basically it was not too much high volume here, not too much buyers here, but it could be that the condition in the other conditions in the market, or other factors in the market has made that has been gone. Next day it has dropped, but it has become a doji candle here. That basically means the fight, the war between the bulls and the bears has been very, very powerful here, and then both sides has pushed this candle to become very, very, very thin. Okay, but if you look at the volume here, oh, that is huge, because that is basically much more than its 20 moving average. So that basically confirmed that, okay, something is gonna happen here. Oh, it's gonna happen that, but where it's gonna happen, that is right on the key level that is happening on the key level. What that means basically, that means something that we need to consider, that, okay, now what happens here? What happens here? We have to find the market structure, very, 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 very trustable, the market structure, very good market structure, and then we look at the price and we understand what is going on. And now number 10, rule number 10 is very interesting, is candle. What that means? That means basically now you are free. Now you are free to implement, to go to your personal strategy. What kind of strategy you have? What is your personal strategy? Whether you are working in a 15 minutes time frame, or 1 hour time frame, or 2 hours time frame, or 4 hours time frame, or a 2 days time frame, whatever. You just go there and then you do use candles. Okay, let's for this course, let's have a time frame, or let's say that we are day trader. We want a hourly time, look at that and enter it, and then exit that by the end of the day. So we go to the hourly time frame here. I go to the hourly time frame. Look at that, how beautiful it is. This is following me. This is following me. This is already giving me the big picture, market structure of the big picture, the picture that is not based on the noise. I am not going against the trend, but I am making the trend my friend. Why, how beautiful it is. So look at that. If you have a platform that is you can, it does not allow you to have the trend lines like this from the higher time frame done, then you can, it's very simple, it's not a big deal. You can put these levels on the paper, and then when you go to that time frame, then you let's say you know that this is 9,457, then you write 957. When you go to time frame hourly, then you drew that line again there, and that line there, that line, that line, if your platform is not good. But I think most of the platform will give you this capability that you can move between the time frames with these trend lines, or it still is that. Okay guys, now what we have it here, we have done all 9 roles, and now we have the candle. The candle give us the freedom to go based on our personal strategy, and then we go look at that. Okay, how, where we should we should go, and what we should do. Okay, so now we have the candle and the price action. The most important thing is that we know that this is very key level, and that is because it's coming from the weekly or monthly support. So that is very key support of that. We see that how many times it has hit this key support and bounced back. So we will consider that if that one happens to break it, if that happens to break it, then we know that next level is here. But then we focus on here and what will happen on that level. Okay, when the near to this price, whether the price will bounce back or how it will be. That is the key level. This area is key level. We look at the candle. The other things is that if you look at that here, we can very easy, you know, make a trend line like this. You know, you can very easy see that. Okay, what is that? Is basically, look at how beautiful it is. You know, this market structure, this market structure here is telling you with this trend line in the hourly, it tells you, hey guys, there is a descending triangle here. What that means, descending triangle, that means basically this price is building and descending within the hourly time frame, and the more we are getting close to the angle here, the more power, the more probability that it will break. And on what side that will break? It basically, it will most probably it will break this side. But why? Because of this trend line is telling us. And then we have to make sure when the price, because we are in the so close to the angle here, you know, if I go like this, you know, the triangle, because we are so close here, we have to make sure here that before we are entering, we know this is a key level. We know that most likely it will maybe bounce back, and then we have to make sure that the price action, the candle here, really is telling us, okay, listen, no, this it gives out the signal that bounce back. The other case, if that is the following the roll our triangles, descending triangle, then that will break this one. And if that breaks this one, it will then fall this here. But for breaking that one is is not that easy. Why? Because that market structure, that is not hourly. Okay, this is hourly, this is hourly, this is not hourly, this is weekly or monthly, this support. That's why that support is much more important than this hourly. So you have to put more weight on this support here. Why? Because of the fact that is based on very huge data, or this is I think this is the central line, the center line for or the middle line for the week high and low. So that is very important. We know that by rolls, if we have a descending triangle, the probability that it breaks this way down, this one is very high when you get closer to the tight angle here. Okay, to this area. But because this is the different level, is a psychological level, or a very level that there is a level that there is a lot of buyers and sellers that concentrated that. So if it happens to break, this will go very quick down. Okay, if it not, it has to go up. So that means basically why because this line is hourly, that we will not give this triangle so much weight, but we will get more weight to this resistance here. So this depends on how you understand the what is called the price action that you have learned. As I said, that there will be a video for price action and these triangles and all these. So you guys will have so much information, the video here that you cannot find any places on YouTube. No places on YouTube. I will have, because I am basically just using my knowledge, my experience, years experience and knowledge, and transfer that exactly for all my trading. I have been developing. I have even my own indicators, so I have been developing, strategies. I have been using complicated mathematical models and algorithms and all these, I will slowly make video for you guys to use it. Okay. So if we say in general, you guys saw how simple and how easy it was to basically use these techniques, and how powerful it give you so much information that is unbelievable. Look at that. This is the time frame, daily time frame, how confident and how big picture it does this market structure for you without any noise. Okay, guys, we come to end to this trading course. I hope you like it, and I just wanted to say that basically those techniques, strategies that I am gonna to provide, they're gonna provide you with videos are very important. There are a lot of a lot of things in my videos that you will find in no other places. So another things that is that I am doing videos in 3 different languages. I do that in English, Persian and Kurdish, but they are different from the different colors for different languages, and I hope you use the playlist in order to just keep yourself in the English, in order if you wanted to these classes to these courses to be played all the time. Okay, I hope you enjoyed, have fun, take care, goodbye.